At the Global Insurance Forum in New York, there were broad discussions about risk and opportunities in the industry. We spoke with Shaun Crawford, the global insurance sector leader at Ernst Young, about many of the key issues, from an ageing population, regulatory changes, data and cyber risk, and more. Here are the highlights.
So with an ageing population, we're seeing a number of big challenges facing the market, especially for the insurance industry. So if we look at the population in the undeveloped markets, for example, so the undeveloped markets, we're seeing a big shift in population moving to middle class. Yeah. So if we go to, for example, over in the Far East area, where you're seeing a lot younger populations coming through because of older populations moved on years back, we're seeing younger populations coming through and actually moving to middle class, eating middle class food, drinking middle class drinks, and actually getting middle class illnesses. Yeah. So we're starting to see the move towards more illnesses around like diabetes, chronic heart, cardiac illnesses, which are affecting stress levels, etc., which are meaning that the cost of care and health is becoming much higher than ever expected beforehand. That's creating a bigger significant issue. That's also the case in Latin America. That's also the case we're seeing in sub-Saharan Africa as well too. So elder populations, younger populations, getting much more middle class, and suddenly finding different illnesses coming through. Another aspect of the longevity issue is that we're getting older populations, people living longer, especially in the developed markets. So the average population that moves between over 65 and over 85 is twice as much as it was 10, 15 years ago. So of course, with these people who are, perhaps haven't died earlier, they're getting illnesses, they're getting dementia, they're getting others psychiatric issues coming through, which of course require further care and require further help from the medical services and from their families as well, supportive, which requires another burden on the state, but also a burden on the families as we go forward. So when you've got issues with statutory changes like Solvency II, which affect capital standards and equivalence for the market, obviously you're getting a difference between what's happening in Europe and what's happening in the US, for example. What it's doing is raising the standard. It's raising the standard of the financial strength of organisations. It's actually giving a better demand and better feel for the partnerships and JVs that are taking place in the industry. So I would say that it's raised the game, and we will see the rest of the world moving up. In Asia, we're already seeing looks at people reviewing and assessing whether Solvency II should be appropriate for them. We've got Mexico, we've got South Africa, even beating Europe to the finish line. Yeah. So I think it's definitely the importance to raise the game, but of course the equivalence issue, when you have international companies and you've got US versus some of the European organisations, it does make it a lot harder to compete in those markets. But I think eventually what we'll see, the average standard will move up. The big challenge for the insurance industry, when we're looking at cyber, is one of the problems is data. Yeah? So fundamentally, the insurance industry has not been that good to date at actually managing to keep the data integrity. So there's so many data sources, lots of legacy systems built on acquisitions going years back. It has improved dramatically over the last few years, a lot of investment, but still a long way to go. Yeah? So cybersecurity is a big significant issue at all boards for insurance companies, and they're looking at it. We've not seen anything big public come out yet to date on what might cause some damage. There's always going to be cyber threats, there's always going to be cyber activity happening. It is taken seriously by all these boards. I think the insurance industry has been focusing on cyber risk for quite some time. This is not a new phenomenon. This is an issue that's been looked at for quite a period of time. Fundamentally, it is handled by looking at the 3 lines of defense, the standard internal controls of a business, because fundamentally most of cyber activity could be stopped by actually getting proper 3 lines of defense in place. Yeah? But of course, when you're looking at foreign sources coming in and attacking with complicated type of techniques, that becomes a bigger issue. So there's a lot of work being undertaken to assess how data being lost, and also, probably more importantly to that, is brand connection for consumers as we're going on. So there is a big impact and big assessment on that. The other impact on cyber risk, of course, is that the products themselves. So the insurance industry is looking at modelling and looking at different techniques to understand how they could actually create the products to take to other industries. And this is going to involve a lot more partnership of sharing data between those industries so they can understand the level of risk taking place in those organisations and making sure the right technology infrastructure is put in place to identify and control. But again, a lot of it's down to way of working and making sure individuals are actually managing and handling the corporate governance of the process effectively. I think the greatest opportunity for insurers for growth is really around the two aspects. One is that the demographic change. It's about the retirement. It's the fact that when we retire 55, 60 years old, 65 years old, we have another 30, 40 years to live in developed markets, and actually that's going to increase too in undeveloped markets. So therefore there's going to be more need for provision on health and wealth. There's going to be a need to make sure that we've got money for the future, money to support the children. Our children perhaps can't finance their first home and getting the ladder first, and also financing our parents as we retire, who are still alive and maybe in situations of chronic care and need for the future. So I think there's a massive opportunity to bring together health and wealth across industries to support that area of the market. That's one big area. The second big area too is still around the general insurance space, around the catastrophes in the market. So we're seeing a number of big global insurers recruiting a lot of new specialists and new scientists and new individuals to their team to really get different levels of risk calculated. Geologists, geographers, meteorologists, all sorts of types of skill sets in there just to really assess and really work out, analyse that data that's incredible amount of data that's coming together to really price and underwrite and target more effectively for the future. And also by using data more effectively for the future too, the growth aspect to actually identify trends and to be able to stop and prevent events happening in many cases too, by predicting things and making sure that when events did happen that the loss and injury is reduced dramatically as a result. A significant issue for the insurance industry, and I would actually say for many industries, is talent. Yeah? It's about how do you get the right talent, how you retain the right talent, and how do you train and develop the talent. And that's becoming increasingly difficult. If you take the insurance industry, the talent has been, a lot of the talent has originally come from the actuarial profession, the accounting profession, underwriters, really developing and growing those. It's going to be important to keep those and retain those, but at the same time we're going to see a whole load of other different people coming in. A lot of the core functionality that individuals did in the past has been done by machines now. It's been run by clever Watson machines from IBM maybe, or others, which are doing crunching a load of data and producing a lot of information. But it still requires talent to interpret that data. It still requires talent to price and underwrite effectively, and getting down to individual customer level, and employer level, corporate level, to actually understand what level of risk there. And I think talent is, capturing talent and growing talent is becoming ever critical. We're seeing talent, we're seeing insurance companies working with universities, especially in some of the undeveloped markets, or less developed markets, you say like Poland, India, etc., where we're trying to really try and grow skills. And then we get a migration of services. Our people will move, I guess, around the globe to support the needs.
For more of our coverage of the Global Insurance Forum from New York, visit the RIN TV On Demand Library.